Thank you all so much for joining us here today and starting your week with us. July was a month of momentum and progress for our department. And as we move into August, an appropriately named month, it's important for us to look back and reflect on what happened and to look forward to how we continue and even accelerate from that momentum, the latter being especially informed by the former. Before I do that, however, I want to update you on our progress towards the major goal we set for July 31st. And we're going to have some slides to share with you right now. Nick, are those up yet? I want to update you on our progress towards the major goal that we set for July 31st. And I am proud to share with you that we hit our targets this past Friday for Operation 100%. In mid-June, we shared with you that we had 81,508 people who had filed claims between March 8th and June 18th who had not yet been paid and who had at least one issue we needed to address for their claim to be resolved. We also at that time had the average that someone who had an issue had to wait for resolution was about 7 weeks. Around 7 p.m. this past Friday night, we hit 0 claims to resolve within that cohort. And it is now an average of 4 weeks for someone with an issue to get resolution. I'll speak to this much more in a moment, but please know, I am not declaring mission accomplished. I am, however, declaring milestone met. It's important to also know that while my team at ESD has worked incredibly hard to meet this milestone, they were not alone. Achieving this goal has been a team effort, including input and support from legislators and their staff, you all in the media, social media communities, business, labor, and consumer advocates. And while we hit this milestone, we know that our work doesn't stop there. On the contrary, we know there are still many who have been waiting a significant time to have their issues on their claims resolved and who desperately need the benefits for which they may be eligible. Meeting this Operation 100% milestone cleared a significant part of the backlog and also allowed us to address thousands of other claims that were not in that group, but were addressed through some of our bulk actions. It demonstrates our ability to scale an incredibly tall mountain and gives us the bandwidth to focus on other priority cohorts about which I'll speak in a few minutes. As demonstrated by delivering our Operation 100% goals, we gained significant momentum in July, and as we kick off August, what we need now is to pivot from crisis to consistency. This COVID-19 crisis has been unpredictable from the start, with many twists and challenges. And as we look forward to the next phase of our response, it's important that we reflect on what has happened and how we learned from the past several months. I'm a big advocate that you can't change the past, but you can learn from it. There are 3 main areas of our work that really epitomize this period of time and that provide the basis from which we can pivot to a consistent and sustainable approach. Operation 100%, the imposter fraud attack, and our overall product and customer experience. Now, a moment ago, I used the phrase from crisis to consistency. This is how we are describing the pivot of our work as we prepare for the long-term response to this global pandemic as it impacts the employment environment. While we don't know what this crisis has in store for us next or this virus, we do know that economic and employment uncertainty will continue for the near future. And our role at the Employment Security Department is to provide a counterbalance to that uncertainty through accessible unemployment benefits, reemployment services, and support for businesses so that they may retain or obtain a skilled workforce. To turn from reacting to the global crisis to sustaining consistent customer service includes 3 main pivot points. 1, closing out and moving beyond Operation 100%. This includes a continued commitment to transparency by sharing our status and progress in a sustained way. Recovering, number 2, from the imposter fraud attack and using what we learned to reinforce our systems to prevent similar attacks and maintain ongoing vigilance to stay ahead of the criminals. And third, finally, applying our lessons learned from our experience and the ultimate stress test on our system to improve our products, make our services even more accessible for eligible claimants and businesses, and create ongoing consistency in customer service and responsiveness. Now, as you take a look at this chart, it tells the story of the unemployment crisis better than anything I've seen before. It clearly shows the 3 waves about which I've spoken in the past and that have hit us since the crisis began in early March. These were not just waves, they were tsunamis for which we had little time to prepare, and each proved to be a dramatically disruptive force in its own right. The first was when the pandemic hit in early March, and we saw an immediate and historic spike in claims with more than 800% increase in 1 week alone. The scale and speed of the demand was unlike anything that had ever been contemplated before. In fact, last year, our department took the proactive step to develop a resiliency plan that would leave us prepared for a then unheard of 2 to 3 times growth in claims. Needless to say, this crisis outpaced those plans. The second wave hit in mid-April when we launched the CARES Act benefits in our system. We were among the first states to roll out these expanded benefits, which have made a profoundly positive impact to families, communities, and businesses across the state. But the demand was exceptional. That week, we had a single day with 7 times the initial claims filed in the peak week of the 2008-2009 recession and phone volumes at points of 100 calls per second. The total claims filed that week, both initial and weekly, blew away all previous records with nearly 1.5 million claims filed. Now, while volumes have dropped significantly since then, we've still leveled off at record high numbers. The third wave hit when criminals attacked and perpetrated imposter fraud in May. This sophisticated and highly coordinated attack complicated an already complex situation, slowing our progress on processing claims for those who had been waiting and making it even more difficult to reach us. Now, when we launched Operation 100%, it was our direct response to the unprecedented demand from those initial 2 waves of claims. And we launched it the week of May 10th, which also happened to be the week that the fraud attack happened. Then we updated Operation 100% in mid-June. As I shared before, we hit a major milestone by resolving all 81,508 claims that were in this target group this past Friday night, although not all at once. It took us that time to resolve all of them. It's important to note, resolve, and we use that word very deliberately, does not mean approval for everyone. As we know, with the historic number of applications, there are also a large number of denials, and there will be a large number of appeals. And again, we know that our work is nowhere near done. And that's why, as a part of this crisis to consistency pivot, rather than lock in on a set cohort, we are launching today a new data dashboard. This will help provide, on an ongoing basis, more insights into the broad universe of those we've served, as well as those waiting for resolution of their claims. Whereas our Operation 100% dashboard was about addressing that initial crisis and setting very specific goals, this new dashboard will persist with our ultimate goal to get to standard acceptable levels of performance. You'll see that since the beginning of the pandemic, for example, ESD has paid out over $8.6 billion in benefits, of which 2/3 has been paid with federal funds. In this pie chart, you'll see that as of July 25th, we had paid 75% of all claimants. And we have, at this point, still 2.34% of total claimants, or about 30,000 people, waiting on ESD to take action on their claim. And again, that's as of July 25th. We've since reduced that number as a result of the work that we've put in around Operation 100%. Now, I want to emphasize, it would be easy for me to say, oh, 2.34%, that's a very small percentage of the total number of people who have claimed, right? The 1.285 million people. Every single one of those people matter. And we are very focused on making sure that we are getting resolution on every single one of those claims. And again, approving those that we can, and for those that get denied, they have a right of appeal, and making sure that we resolve those as quickly as possible. On this next slide, you'll see that 70% of claimants are paid within 1 week of submitting their first weekly claim. And the average weekly time to be paid for your first weekly claim is about 11.8 days. This data will be live on our website today and will be updated weekly. And again, the information is incredibly dynamic. So again, this is as of today. Some of the information, like I said, is as of July 25th, which was our last day of reporting. And then there's some information up there, for example, the Operation 100% statistics that are more recent. Just as Operation 100% kicked off in mid-May, as I was sharing, we were hit with a massive criminal attack. Our state was the first big state to get hit, but certainly not the last. We were the first major target because we were both early in delivering the Federal CARES Act benefit, and we have a high weekly maximum benefit amount. Despite being the first to be hit in a significant way, we were not the only or last state, as I shared. As articulated by a Secret Service memo in May, all states are vulnerable to these sophisticated criminals, and coupled with the global crisis, a perfect environment for this type of coordinated attack was created, especially complemented with years of data gathered through breaches like the Equifax breach, the Primera breach, the Target breach, the eBay breach, which gave these criminals really robust profiles for millions of Americans, including Washingtonians. And while we shared early on what information and estimates we had, I've consistently shared that I'll provide more detailed numbers once I am more confident in that information. I finally have confidence in the data. And the data I'll share is for the confirmed fraud out, the fraud funds we've recovered, and the fraud funds that we prevented from going out. And that last point is not information that I've shared before. After that, I'll highlight what our current situation is with regards to our fraud vigilance and what we've done and are doing to beef up our security. But please, it's a really important point here. Please know that the information I'm going to share is what we know today. According to experts and consistent with what I've said all along, we may not, for a long time, get full clarity, and these numbers are subject to change. And I'll actually give a very timely example in just a moment. So I'm going to start with confirmed fraud. What this graph shows was the sudden and dramatic attack that was stopped with definitive and swift countermeasures. Based on our analysis, we have confirmed 86,449 fraudulent claims that were compensated with a total value of $576 million. This is our new baseline. We believe that the eventual total will still fall within that 550 to 650 million range that I had disclosed and shared in May. These numbers are based on claims where we have a high degree of confidence that they are fraudulent based on a number of key factors. And I'm not going to go into those key factors because that will give a roadmap to the criminals. And as many legitimate claimants as may be watching this or tuning into this or listening, so are the criminals. The dramatic fall off in fraudulent claims on the chart shows the efficacy of the countermeasures deployed and sustained. So that is the fraud that went out. Let's talk about the fraud that we've recovered. We have also been pursuing recovery of stolen money from banks and really, frankly, innovating in this space because this has never been done, especially not at this scale, anywhere in the United States before. And we are now up to approximately $340 million in recovered funds. This work continues, and we, again, are pioneering this effort in many ways nationally and sharing our learning with states and banks alike to set standards. In fact, just last week, I was on a conference call with the American Banking Association, and the week prior with the Innovative Payment Association. Now, a quick note here. A moment ago, I mentioned the dynamic nature of the data. This is a very good example of that. Since early March, we've actually received back a total of $373 million from banks. But late this past week, however, we learned that $33 million of that aligned with legitimate accounts. This money has been resent to the legitimate claimants, except for some that can't be done automatically and is in progress. So again, the amount that we can consider confirmed fraud funds recovered is that $340 million. Because of our efforts in partnership with the banks and law enforcement, we've been able to reduce the losses dramatically. Nearly 60% of what went out, we have recovered. For those doing the math, the net fraud amount that we can confirm is now $236 million. To put that in perspective, again, we have delivered $8.6 billion since March in overall benefit, a third of which has been from the state, 2/3 from the federal government. Or a different perspective on that. In the months of July and June, and most of the time during this pandemic, we're delivering about $500 million each week in benefits. And again, in terms of whether that 236 net is state or federal, we do not yet have that information. So those are the funds that went out and the funds that we've recovered. What I haven't been talking about, but what we've also determined, is that as a result of the swift and dramatic action we took, we prevented substantial funds from going out. I know that there were many people impacted by the decision to pause the payment of claims, and I am so sorry for that impact on those legitimate claimants. That was the hardest decision that I've had to make in my career. But this chart can help explain why that decision was made. We have confirmed that there were substantial claims stopped before they were ever paid. And when you look at those numbers in particular, you'll see, again, here we had 68,000 initial claims filed and not paid. We had 86,000 claims that were previously paid and 78,000 claims that were never filed because of the action that we had taken. When you look at that in total, I had previously suggested that we suspected our actions prevented hundreds of millions of dollars from going out. We now know that had we not paused payments and then applied additional countermeasures, and again, if we go back one slide, we paused those payments the evening of May 13th and then put those countermeasures in place during that pause. Now we'll go on to the next slide. We now know that had we not paused payments and then applied additional countermeasures, we would have seen at least 200 million more go out in fraudulent claims. But that amount only accounts for the actual amount from that first week's claim and from those that, again, it's like catching the getaway car before it drives away. Those filed and not paid, and those filed that had previously been paid but were on track to be paid again. We actually believe, though, that the amount we prevented these sophisticated criminals from stealing was more likely $1.5 billion. If you also consider those that were not filed because we stopped them, as well as looking at the average number of backdated weeks. And it could have been as much as $4 billion if those individuals had then continued to receive weekly benefits for the full 26 weeks. As I've shared before, this is a nationwide attack, and it's still happening. We've obtained a guide published on the dark web to defrauding every state's unemployment insurance system. Here you can see that among all states, only 4, with Washington at the top of the list, are flagged as those to now avoid for criminals. Don't go to Washington State because you'll get tracked and arrested. I like that message for sure, but we cannot rest on what we've done. And this is a never-ending race. We are, again, working in close partnership with law enforcement, who is tracking and arresting where they can and figuring this whole scheme out. And hopefully there will be prosecutions. And that will also lead to getting more of the money back. But again, this is a never-ending race. And to that end, we will need to continue to both solidify our defenses and stay nimble with our efforts to counter fraud. So as we move from the crisis of the attack to the consistency of ongoing anti-fraud vigilance, here are some of the general areas of focus that we have. We have put and we will continue to explore more controls on the front end to block bad traffic from coming in. We're doing fraud analysis between when the claim is made and the claim is paid. We've set people's expectations on that 2 days of analysis when we are doing that effort. And unfortunately, it slows the time frame when people can get their money, but it's important in terms of that balance. We're doing more secondary identity verification. We're applying more sophisticated data analytics. And we have ongoing agility to evolve and change the filters and the flags that we are looking at, because we know that they will change their behaviors. We need to change our filters. They change their behaviors. We need to change our filters, and ideally continue to stay ahead of them. And I'll finish out in terms of this theme of crisis to consistency by talking about how we're learning from this experience and getting better. Again, it was the ultimate of stress tests, and it showed where we're strong and where we have room for improvement. To say we've learned a lot and have opportunities for improvement is an understatement. Most importantly, we're applying that learning and making those improvements already, and we will continue to for our customers and the whole state. For example, we are working on adopting an approach to our products, letters, and services that, while still in compliance, embraces a more compassionate approach. For example, we have a dedicated customer experience team working on improving the letters and notices generated by the system, so they'll be less confusing and timelier for claimants. And we're working on our customer service, especially our phones. And we know that that's been a huge challenge for people to reach us and a huge challenge overall. And we're making sure that we're more accessible to those who need to reach us. We've already applied some of that learning to improve our processes, such as more rapid training modules for our customer service team. We know we have more to do. We also continue to hire and will be reducing our reliance on contract agencies for customer service. We also need to keep in mind, I talked about the 3 waves before, right? That initial wave of demand, the second wave with the CARES Act benefits, and the third wave of the fraud attack. But we need to keep in mind a 4th wave. And this is critical and has 2 aspects to it. One, preparing for a tsunami of demand for reemployment services. Because even though the job search waiver was extended to September 1st, we will need to support a record number of workers whose jobs aren't coming back and who need to help to find another job and gain new skills. And at the same time, with the tectonic shift in what jobs are in demand, working closely with employers on what new skills and new jobs they need to fill. And we're working in close partnership with the Workforce Development Council, as well as the Workforce Board, to prepare for that influx of demand. And separately, second, we don't know what will happen with COVID-19. The virus isn't sending us its strategic plan in order to get us geared up. And while we hope there's not another sudden rise in demand for unemployment benefits, whether new claims or restarted claims, hope is not a strategy. We have, however, built substantial muscles to be more prepared, but it will only be through practice and analysis that we can gauge our true readiness. Another way that we can take our learnings from the crisis and improve and deliver for the future is by collaborating with key stakeholders to improve the system. And to do that, we have reformed the Unemployment Insurance Advisory Committee, which launches with its first meeting this afternoon. This advisory committee consists of 9 members, 4 representing employee interests, 4 representing employer interests, and 1 representing the Workforce Development Councils. An ESD representative serves as the chair of the committee. The committee's purpose is to consider and provide advice to our department, the legislature, and the governor to improve the unemployment insurance program and system. To close, this has been a team effort. And again, I am so appreciative of those that have been on the front lines with us and remain there. The legislators, their staff, you all in the media, the social media communities, business, labor, and consumer advocates. And as we pivot to this next phase, we know we still have a lot of work to do. Despite over 900,000 people having received the $8.6 billion in benefits in the past 5 months, every individual who struggled to access services is top of our minds and continues to be our laser focus moving forward. We will continue to do all we can to work through those with paused payments and get everyone eligible the benefits that they need. We know that we need to regain people's trust and are dedicated to doing so. With that, I'm happy to take your questions.
Thank you, Commissioner. And just to remark on one of the questions in the side chat, yes, both the dashboard and the presentation will be available on our site later today. And with that, we will go first to Rachel LaCourte. Rachel, go ahead.
Can you hear me now?
Yes, thank you.
Sorry about that. Can you offer more detail on the people who are still waiting for a payment? If I was reading one of the previous charts correctly, there are about 30,000 people still waiting a payment. So are those the people who were paused in May? And why not include that broader number within the Operation 100 metrics?
So let me just jot that down. So I'm going to start with your second question, and then I'll go back to the detail. And Nick, if you could bring up that slide with the pie chart, I would really appreciate that, because that will provide some of that fidelity for us here. Operation 100%, when we first kicked it off in May and then renewed it in June, was looking at that cohort who had yet remained unpaid and had filed their claims and had an issue set between March 8th and then June 18th. In terms of this number, the 30,000 represents not just those that have been unpaid, but also those that have been paid at some point where there is an issue that we need to resolve. So it is that group that is that 1.51% plus the 0.83%. Do you see that there, Rachel, in that pie chart?
I do.
So within that, we have resolved a substantial number of those, even since this point in time, which was July 25th. So I can get you in a moment, I'll ask my team to pull up the latest of those overall since the crisis began who remain unpaid. And what we wanted and needed to do was to prioritize getting some money out to that cohort. And it gave us a target to shoot for. But like I said, as we migrate from crisis to consistency, we aren't going to segment out a specific cohort within a certain time band, but rather we'll look at the full universe of those who are either waiting for us to resolve an issue on their claim and are unpaid, as well as those who have been paid but are waiting to resolve an issue overall. So again, that universe of those, basically, who's waiting for us to resolve an issue? And that is this 2.34%, that aggregate number. And that is that number that is about 30,000 people. And team, correct me if I'm wrong in terms of that. I was reading that number. It is 30,000 in total between and that 2.34%. That's as of July 25th. Does that answer your question, Rachel?
It does. I guess it's just the branding of something like Operation 100. It implies to the community at large that, and even the governor spoke to this last week, like, good news, the backlog is done. And that's not actually the case. There's still tens of thousands of people who may have only received one payment and are now still waiting. So I guess I'm just trying to get a sense of the 100% when it wasn't actually 100% of the cases.
It was. We've been very, very clear in terms of that being a very specific cohort that we identified in mid-June, that we were focused on resolving first and prioritizing. But reducing that backlog also has reduced the backlog with regards to the larger universe. And it also has allowed us to accelerate the speed with which we are resolving issues, and will help us also get through the backlog of those who have received some form of payment. And it's a matter of prioritizing and looking at who needs some level of support, and it allowed us to start somewhere. And the backlogs overall were so overwhelming at that time with those two waves that we hit and saw by early May, that it gave us the opportunity to define a group that we could prioritize and then move forward. Anytime you have a major mountain to scale, if you look at that entire mountain and you say, all right, let me get to the top right now, that's hard. But if you say, I'm going to go to Camp Muir first and get ready and be there, and then go up to the next phase and then the next phase, when you go one step at a time, you can hit that summit and come down safely, because you don't climb a mountain if you don't come down safely again. And so for us, we needed to identify that cohort, that group that we could prioritize and work through. And we take very seriously and are very dedicated the others who are still waiting. But it doesn't negate, like I said, I'm not declaring mission accomplished, but I am declaring milestone met. And we will move on and focus on the other priority cohorts now, who have benefited from the work that we've done because of the bulk actions that we've taken, and whose issues we've been clearing along the way with that Operation 100% cohort as a priority group.
And just one last quick question. If I'm remembering correctly, you're not setting a deadline where you hope to resolve these 30,000, but the dashboard will be constantly updated, just showing where things stand, or is there a date in mind that you'll have these all resolved?
We will never resolve all the claims, because as people file their claims, issues get set, or as people change their accounts or change information or change their employment status, issues will happen. So if somebody, for example, refuses work, that sets an issue on their claim. There are many reasons why an individual might have an issue on their claim that we need to resolve. Every single week that somebody files their weekly benefits, their weekly claim, we determine eligibility. And so there will never be a point when everything is at zero. We will continue to work through this. And so our goal, our acceptable level of performance, even from before this, was 3 weeks to resolve issues on a claim. And that is our goal. We're at 4 weeks right now, so we think we'll get there pretty quickly. But it's also being able to provide really quality service for people to be able to reach us on the phone. And so this moving from crisis to consistency means providing regular updates, which we will do on a weekly basis up on the website through the dashboard. And it means people being able to rely on us for consistent service, for being able to turn things around. It means if they have an issue set on their account, they can call us and say, can you help me understand what's going on? But it's also us learning about how do we automate some of this. So for example, those people whose eligibility for unemployment insurance stops because they might have refused work for a COVID-19 related reason and they need to be on pandemic unemployment assistance, we've recently rolled out an update to our software where they need to connect with us first to ensure that they're legitimate in this transition from UI to PUA. But then we've now made it so that we can tag their account, and that automatically does the transfer from that point forward. So there's ways in which we're improving so that their experience can be smoother and smoother and smoother over time. So there will always be people who have issues set on their claims. And our goal, again, is to get that down to that acceptable level of performance, which we will update up on the website, and to sustain and have consistent quality service. So it is our hope to get through those that have been waiting. And we believe that by getting to this 3 weeks acceptable level of performance, that will help us in resolving all of those waiting the longest who might have had their payments paused, and help those who have not yet been paid, most of whom are since the middle of June, and get those resolved. We're dedicated to doing that for every individual.
Thank you, Commissioner. Thank you, Rachel. Next, we're going to go to Paul Roberts. Paul?
Good morning, Commissioner. Good morning, everyone there. So thanks for all this information. This is really helpful and gives us some new perspective on some of the stuff you guys have been dealing with. A couple of questions. The dashboard, that's going to be up, or is that already up, or like when do you expect that to be up?
That'll be published
Nick, what's
within
the
the next, yeah, that'll be published within the next hour. Okay.
Do you guys have numbers of claims that have been appealed, like total number, or like any sort of chart on that?
We do not yet. And in fact, keep in mind, when somebody files an appeal, before that gets sent up to the Office of Administrative Hearings, OAH, we actually first do a redetermination to see if the information that's been provided would actually then lead to a resolution on that claim.
Sure.
And we have, during the course of the emergency, we have actually sent up about 2,300 appeals to OAH each month, but we have not yet published that data. And that is for April, May, and June. We don't have the July numbers, but we can get those to you. But that said, the ideal scenario is that we do a redetermination on those cases, which we are doing before we send them up to OAH.
Sure, that makes sense, and that would require more personnel, and so you'd be, suffering or dealing with the same sort of bottleneck. So, I mean, that's understood, but it would be great to have a number just to, show us how that curve has also gone up. Do you have numbers on the fraud chart? Do you have numbers for the bars on each chart?
Yes, we do.
Could you guys?
Are you talking about the gray bars where if with the fraudulent claims and funds prevented, we zoom in on that May 7th through May 20th timeframe, and those numbers that are in there are in the thousands. So, for example, May 12th had 21,000, and May 13th had 21,000. May 14th had, I need to put my glasses on. Where my glasses go. May 14th had 13,000, and May 15th had 2,000. So thank you, Nick, for sharing that out.
Okay.
And so you can see that very dramatically in terms of that drop. May 13th was when I paused payment. May 15th is when we put the countermeasures in place.
Right, but then that's great. But then on the one, I think it's, I don't know if it's the slide before that where you.
The prior slide shows the zoomed out view.
Yeah,
that has from May 6th through July 25th. And as you can see, since the 15th, it's de minimis in terms of the amount of fraud, and that our countermeasures have been very effective at keeping the fraud out.
But do you have numbers for each of those bars is what I was wondering.
We do, and we can follow up with you for that.
Okay, and then do we know how many of the, you guys paused roughly, it looks like you saved, kept a lot of money going out the door by pausing that. And I'm not sure if I'm just not seeing the number, but out of the roughly 190,000 claims that were paused, do we know how many turned out to be fraudulent?
The total number of claims that were fraudulent is, as we shared in that slide, 86,449 that are confirmed fraudulent. And that is a blend of some of those that were paused that day, as well as others that we heard from through our fraud reporting portal. So it is a blend. In some cases, those that were reported through the portal, let's see. No, let me correct that. I'm sorry. Those that basically, most of those were what we paused that day. And in some of those cases, they were also essentially confirmed through the fraud reporting portal from those who had submitted that information that they had been a victim of identity fraud, identity theft.
Oh, okay. So I appreciate that. I maybe you just answered this, and I haven't had enough coffee yet. But so the roughly 190,000 that you paused on May 12th or May 12th or 13th, of those, because how many of those turned out to be fraudulent?
To be clear, on May 15th, it was about 200,000 claims on which we set identity issues.
Right.
Of those, probably most of that 86,449 of those fraudulent claims were a part of that group. And that is the number of those fraudulent claims that we have confirmed. Right. 86,449.
Okay, so basically,
and to be clear, actually, Paul, really quickly, those are the fraudulent claims paid. There's a very specific distinction between that and when you look at that gray bar chart, the amounts that were not paid, that were filed and not paid. So that would not be those individuals who had payments stopped, clearly, right? And then there were 86,000 that had been previously paid and who have been confirmed as fraud, that we did not pay more out. And then 78,000 that we estimate did not file as a result of our action.
Okay, that's really helpful, because I thought that the 190,000 was in addition to ones that had been already paid. So that was just, we're going to stop all the ones we're flagging, and then in addition to that, we've got ones that we probably prevented from filing, or that other category.
Exactly.
Okay.
Exactly. When you go, Nick, can you go back to that gray bar chart? And I realize there's a lot of information on this, but again, these slides will also be up in our newsroom. If you look at this, the hollowed bars show the estimate of, if it had persisted, even just to the 20th of May, that is 78,000 claims that were not filed. And if things had just persisted at that level, with an average of 15.2 thousand claims per day in that time frame. And so those are the ones that were not filed. But again, there are those that were filed that we didn't pay. So any claim that came in on May 13th and 14th and 15th, we had the opportunity to essentially scrub all of those before paying them the morning of the 16th. And to apply the countermeasures and the filters and the flags based on what we were seeing in order to pull out and extract those claims that were previously, to extract the, 69,000 claims that had been filed in that time frame and had not yet been paid, and to also extract those 86,000 claims that were previously paid and not pay them again. However, those had an identity issue set on them, and along with those of legitimate claimants. Does that make sense, Paul?
Yeah, it does. Thanks very much for that clarification.
Absolutely. I think we can, if you want more information, we can follow up, and Nick is available later today for more detail.
All right, thanks.
Absolutely. Thank you.
Thank you. Next, we'll go to Jim Camden. Jim, go ahead.
Thanks. I'm wondering, when you talk about the fourth wave that you're preparing for, what are you preparing for in terms of what Congress is considering for new COVID relief? Will it cause more problems and more delays if the new federal benefits are structured as a percentage of weekly paychecks rather than a flat amount?
So let me separate out so that's two separate questions, with both of which are super fascinating to dive into. I'll start with the fourth wave. We separate out the fourth wave into two components. One is these people, if you think about 1.3 million people in Washington state have applied for benefits at some point in this crisis. That's a third of our workforce. That is an enormous number of potential displaced workers. Now, many of them are going to find opportunities, are going to go back to their jobs. That's fantastic. But this story of this crisis and the story of this pandemic has been about scale. And we know that a record number of people are going to seek reemployment services in our workforce system across the state, in which we are a partner with our workforce development councils. And we need to be prepared for that. And so we have a work stream system set up with them. We are looking at many different ways in which to be ready to support people in assessing their skills, getting them into a new job, getting them into a similar job, in working with employers to find talent who need it in so many different dimensions. So that's one of the fourth waves that we look at. The other is, should there be another need to have people stay home? We have a lot of people who are going to need to either get onto unemployment insurance or who are going to need to reopen their claims. And while, again, we've worked through a lot of the issues that an individual might have on their claim, and so that restarting process, that reopening process, for which we have instructions on the website, is a lot easier than that initial claim, we also know will require a lot of support. And so how do we prepare if there is a sudden increase in unemployment insurance demand, either in initial or in new weekly claims? And how do we manage that? That's the fourth wave detail of what we are preparing for. And we have specific teams set up in our agency to build out our plans and our preparations, including doing tabletop exercises and doing drills. In terms of your question around the FPUC and how that evolves, the Federal Pandemic Unemployment Compensation Program, the $600 that people have been receiving and that stopped this past week, we were asked to comment on the different possibilities by members of the congressional delegation And we can get you the document that we sent to them that breaks down the information on the different possibilities. You asked specifically about the 70%. And the proposal from the federal Senate Republicans was specifically 70% of wages. And there are two ways to interpret that. 70% of an individual's wage versus 70% of the average wage in the state. The estimate that we provided is that if it's 70% of an individual's wage, to retool our system, it's like rolling out a new benefit. It is like a whole new system. And it would take us an estimated 4 to 5 months to deliver. So the earliest would be mid-November that we could deploy that specific character within that kind of compensation. If, however, it is looking at the average wage in Washington State, which one of the good things here is that we have one of the top 3 average earnings per capita in the United States. So we would actually have higher than most states. If it's 70% of that, for our programming and our technology, that would only take us about 2 weeks. However, there's a period of time that would happen in terms of negotiating with the U.S. Department of Labor. And the way that the Senate Republicans laid it out was essentially having an interim solution in place of a flat rate of $400, let's say, between now and October 5th. And then October 5th going live with this 70% of the state average. So we would be able to go live on October 5th. It's probably more detail than you need right now, but essentially, we would do our best to roll out whatever they propose, but we have given those kinds of estimates to how long it would take. In summary, a flat rate is the easiest for us to deliver and would take us 1 to 2 weeks to implement in our system. Doing something where it's on an individual basis would take us 4 to 5 months to implement. Does that answer your question, Jim?
Yes. And what would it be if it's 70% of the average state wage?
I'll ask my team to look that up. I believe the average state wage is around $55,000, but I'll ask them to look that up and we'll get back to you in just a moment, okay?
Great. And on a completely separate matter, what shape is the state's unemployment security trust fund in at this point?
The trust fund, I believe, has right now, the latest I saw last week was about $2.7 billion in it. And we remain one of the strongest trust funds in the United States. And as we rolled out our projections in June, based on the Washington State Economic and Forecast Council's forecast that revenue would be down and unemployment would be up, we continue to project that by the end of this year, we would need to obtain a federal loan, which is essentially runs like a line of credit, in order to make sure that we can continue benefits without any interruption. So we are sharing that very proactively. It allows us to do better planning. We do not need that loan right now. And keep in mind, so for that $500 million that I talked about that we've been delivering in benefits every week, only a third of that has been in state funds. So about $80 million a week in the, a third of 500 million is about 220. Somebody else can do the math on that. I'm not one of those people who can do all that math in my head. But basically, a third of that $500 million a week is in state funds. So going forward, obviously right now, the federal pandemic unemployment compensation has expired, so that ratio will change as of this week. But we have been, again, our trust fund is in good shape. Also, I'll point out, Jim, there are now already 14 states who are receiving one of these interest-free federal loans. And we expect that most states will probably be ahead of us in receiving those loans. Those loans don't run out, so it's not an issue of we need to get our place in the queue. It is a very standardized process. and it is something that we will assess on a monthly basis in terms of our ability to pay at least 3 months of benefits. And if and when we identify that that's not the case, then we will go through this application process for this line of credit from the federal government.
Thank you.
Thank
All
you,
right,
Jim.
thank you. Next, we're going to go to Ryan Harris. Ryan?
Hi, thanks. Good morning, Commissioner. I actually had a different question, but now I have to follow up on Jim just to make sure I'm clear. If we get this situation, if Congress passes the 70% of an individual's pay situation, and it takes until November to roll it out, are we looking then at another situation where people will have to wait that long to get paid? Because that's how it sounds.
Whew, Ryan, you're asking the $5 billion question. The FPUC has put $5 billion into Washington State's economy since the beginning of this crisis, and it was basically about $1 billion in the month of July alone. That's been with the $600 in addition to a weekly benefit that an individual would receive. I do not know what Congress will ultimately pass, and we will work hard to deliver whatever it is that ultimately is designed. The proposal that I saw last week was to have an interim flat rate solution between now and whenever one rolls it out. What we have consistently said, Ryan, is that we will pay retroactive benefits for, again, it really depends on what the law ultimately is, but that an individual can receive the weekly benefit amount. So the minimum pandemic unemployment weekly benefit amount is $235 per week. So somebody on PUA would receive that, or whatever their weekly benefit amount is for unemployment insurance, they would receive that. But it really depends on what the law is. And if they say, all right, keep a flat rate of X, whether it's sustaining the $600 per week until you implement, we have advocated for that. Keep some flat rate, ideally $600, until something else can be deployed. We have really emphasized the operational load for complex equations for calculating that and the challenge. And keep in mind, Washington State has what's called a modernized system. So there are many states out there that are still on COBOL systems for which this could probably be very difficult to implement. When you think about the fact that we were one of the first 8 states to implement the PUA program overall in the Federal CARES Act benefits, we're the 3rd state for all 3 of those benefits. We were able to turn relatively on a dime, but there were many states that took several months to do so. I don't know what Congress is going to do. I can't speak on their behalf, but I can speak on our behalf. And that is that we will await guidance from them and work very hard and as quickly as we can to implement it so that people receive benefits as quickly as they can. But we need your help setting expectations. One of the biggest challenges that we faced in March, at the end of March, was that when Congress passed the CARES Act on March 27th, we were getting inundated with calls on March 28th of people, rightly, because expectations weren't set appropriately by those who passed that law. They were rightly saying, where's my money? And it's one thing to pass a law. It's another thing to implement a law. And we will be working hard to communicate with claimants and with those who would be eligible for whatever benefit happens to set their expectations. And it would be terrific if other stakeholders in this system do the same so that people at a minimum can know what to expect and at least reduce some level of their anxiety. And I want to circle back with the question that was asked before with regards to Washington State's average wage. The average weekly wage in Washington State for 2019 was $1,940, and the 70% of that would be $938. So we will see how this is implemented. Like I said, we don't know. It's also something that it's important to know that it's one thing for what the law says, and it's another thing for how U.S. Department of Labor would then translate that law into guidance for the states, which we are still getting guidance from U.S. Department of Labor. It changes every week with regards to the Federal CARES Act provisions. So it's a moving target, and we remain steady and ready with our crossbow. Sorry, that was, for those people who are into archery, that was really poor form. Sorry. It's hard to do a crossbow movement on a Zoom call.
Yeah, no, understand. And fingers crossed that you do get a stopgap measure, not just for the folks that need to get paid, but for all of you at ESD who have been through it. So my actual question hopefully will be a simpler one, because, you know, we all still get people calling with their individual situations, and not to have you answer necessarily a specific case, but the newest problem that has cropped up is somebody who is in a pending situation, still waiting for approval, and may or may not be, may or may not have been in the Operation 100% group. But in the past few weeks, the prompt for them to file their weekly claims has disappeared from their account, so they've been unable to file. So my question is, if that's been a problem and everything gets settled, will they then be able to go back retroactively and refile those weekly claims that were missed?
So the answer is yes. People will be paid retroactive to their date of eligibility. If somebody was eligible between April 4th and July 25th, for example, they will still be able to receive that $600 per week on their claim. And they will still be able to file those weekly claims. For those who require backdating, we do now require for backdating, that you do need to speak with a customer service representative. And I realize this is why glasses, you know, when you're 50 or older, for me, this is what's required. I misread the number before that my team had submitted to me with regards to the average weekly amount that an individual, the average wage in Washington State is $1,340, and the 70% of that is $938. I'll say that one more time. The average weekly wage in Washington State in 2019 was $1,340, and 70% of that average weekly wage is $938. And again, what we have is, if there's a 70% proposal, the question is that on each individual, which again would take us out to November at the earliest that we would be able to implement that, or is it 70% of our state average? And we don't know. We don't know what they will ultimately decide, whether there would be an interim solution in place or not, but we stand ready. We're like Malik Smith in the center field, right? Knees bent, ready to catch the ball wherever it goes in order to meet the needs of Washingtonians. And hopefully there is an interim solution so that people can continue to receive some higher benefit amount.
Okay, a last thing, and then I'll let you, just quickly, and I'll let you move on. Is it normal when somebody's been pending for a while for that weekly claims prompt to disappear?
Let me ping my team on this, and I'll come back to you on that, Ryan, okay?
Great, thank you. Thank you.
Thank you so much, Ryan. I appreciate it.
Thank you. We're going to go to Carolyn Adolph. Carolyn, go ahead.
Thank you. I'm going to fly the plane a little high for a second, which is, a virus managed to take a successful economy and create a very high unemployment situation with great rapidity. And when you look back at this now, was it right for not just Washington State's systems, but American systems generally, to separate workers from their employers? We're seeing other economies, developed economies around the world, go right back to 2% unemployment, and we're at, 10-ish. I'm just wondering, when you're in charge of employment security, are you happy with the way the system has been working at that high level? And what levers would you build if you could to try to prevent something that wasn't structural economic change from breaking the link between employer and employee?
Carolyn, thank you so much for that macroeconomic question. I really appreciate that. And I rarely have the opportunity to dive into that type of thinking as we are focused on getting individuals their benefits. But especially using my experience over the course of my life, where serving as a US ambassador to Switzerland and looking at what they are doing, looking at what the Danes are doing, looking at what the Germans are doing, looking at what the Singaporeans are doing, looking at what's happening across the globe is really instructive and important for us to evaluate what could have been done differently. But like I said before, we can't change history, but we can learn from it. And I think that the key learnings overall, and that we're trying to do here in Washington State, are around more pervasive testing, more pervasive contact tracing, having people wear masks. And in terms of the decision to utilize the unemployment system in this way, the challenge has been we are using an insurance benefits system as an entitlement system. That's not what it was designed for. Not 100 years ago by Francis Perkins, not 10 years ago by the Washington State Legislature, Business and Labor, and not today. And that has been a part of our overall challenge, has been the expectations on the utilization of unemployment insurance, which is something paid for by business, to serve our state economy. And that said, $8.6 billion into the Washington state economy is really important. And it's the tool that we had and that we have. And we continue to hone and make that tool better and better and form it into a solution for this. And now I'll answer your question simply. I do not believe it was the right solution overall to use unemployment as our economic bolster. And I think that had we had earlier on in our nation, not our state, our nation, a more aggressive approach to testing, to tracing, and to attacking head on this virus, we would not be in the circumstance like we are. And we can learn from other economies who are isolating and addressing this. But that said, this virus, it does not project its plan other than infect and kill. And even those places that have worked the hardest and done the smartest thing are seeing increases in cases. And even in some cases, they're seeing increases in death. So what we need to do is to be collaborative, to work together, and use the tools that we have, but also innovate and create different tools and different solutions. And also use this as an opportunity to bring the future of work into the present. And that's what the Employment Security Department is dedicated to doing, in both helping people during this employment uncertainty that they are experiencing, providing them with the benefits that they need, whether that is unemployment insurance or whether that is paid family medical leave and soon long-term care, or whether it's reemployment services and helping them assess their skills and what is the job, not that they have today and the skills that they have today, but what is the job that they need to be prepared for as they re-enter the employment market. And what do businesses need now and into the future? And how do we do that matchmaking? And we have fantastic partners across our state to do this with. And we are dedicated to providing that kind of resilience leading to prosperity.
Thank you, Commissioner. With regard to Jillian's last question, Jillian, I mentioned in the chat, I'll follow up with you on those direct numbers. We don't have them top of mind right now. And then Ryan, I'll follow up with you as well. It sounds like a technical issue, and I'd love to work with you to figure out some examples of that so we can look into that. Just a couple of the things that I put over in the chat. We now have the links live on our site for the dashboard, the commissioner's slides, as well as the link to the TVW presentation, our partners over there. Thank you for continuing to broadcast these. This is intended to be our last weekly press conference at this point. As we make this pivot, we'll continue to provide updates on all of these documents and our weekly release for both of these, and are of course available to you to be able to answer any questions at any point. But at this point, I'd love to invite the Commissioner to conclude our press conference today, and anything else you'd like to say.
Thank you so much. Again, it's been quite an odyssey, quite a journey these past 5 months. And we appreciate the opportunity to now pivot from crisis to consistency. That includes making sure that we are addressing the needs of those still waiting for their benefits and resolving their issues that they have. The team remains heads down to do this work. And there's so much that we have learned from this experience and are putting into action in order to improve the experience going forward and to stay ready for whatever may come as we move from crisis to consistency. And we thank you so much for your part in meeting the needs of Washingtonians, and look forward to being in touch in the future and keeping you updated on our progress. Thank you.